Hi everyone, hope you guys are all doing well. I just wanted to do a quick video here, just going back to what seems like my familiar thesis at this point, and just trying to combat the overall idea that there is no inflation, and due to the CPI numbers, there's nothing to worry about. And basically, in the past, I've talked quite a bit about the increase in the M2 money supply, and also to how a lot of the new money that's been created since 2008 is sitting in bank reserves and hasn't been lent out into the economy and into circulation just yet. But I do want to take another method of attack on this question, and I included the quote from Murray Rothbard at the beginning because and he did in his book, he demonstrated, I believe it was called America and the Great Depression, his Great Depression book. You guys should check that out if you haven't already. But he went on to show in his book that although in the 1920s there was no real changes in consumer goods and nothing that would cause drastic increases to the CPI, that there was evidence of inflation in other areas of the economy. So I thought that I would take the same approach that Murray Rothbard took, and really what I'm doing is just kind of piggybacking on the interviews that Mark Thornton has done recently, he's a senior fellow at the Ludwig von Mises Institute, and I'm going to look outside the CPI, and also too I'm going to apply Ludwig von Mises's idea that he called the acme of the short run principle. And basically all that is it's the idea that the first people to receive the new money that's created by the Fed gets the benefit in the short run at the expense of everybody else. So again, to looking for inflationary signs in the economy right now, the first place that I'm going to look is the housing market. And if you look at all the home price indexes for the larger cities in the US, you can see that there has been quite a large increase in the index numbers. Most recently, going back to, I would say, around 2011. Just looking at Atlanta here, again, there's a 25% increase there. Same thing with LA, same with Miami, Phoenix, San Francisco, Las Vegas. So again, in the major cities around the US, again, we've seen quite a drastic increase in the home price indexes, particularly in the ones that took quite a large hit back in 2008. And the next place that we should look to is the Manhattan condo market right now. And if you haven't noticed too, the Manhattan market is really has gone pretty much crazy in the last couple, I would say, months. But more recently, there was a Manhattan condo that sold for 90 million, and this has been, I believe it was an all-time record here, and it beat the record of 88 million that was established earlier this winter. So again, just scrolling down here, this is what it looks like. And I should also mention that this condo hasn't even been built yet. And unfortunately, the buyer is a mystery at this point. But again, to a $90 million condo in New York City. But that's not the only one. Again, if we look at this article here, again, too, it seems that luxury rentals are also increasing in Manhattan. And this article just goes on to say that in a few short years, the luxury condo market has returned with a vengeance. Again, too, it goes on to say that I guess there's millionaires that are complaining about losing bidding wars to even bigger millionaires. And again, too, how cash deals are common. And again, too, that people are trying to build billion-dollar skyscrapers in order to build condos as fast as they could. So, one last example, too, just from the Manhattan condo point of view. Again, too, this was an article from just yesterday, November 13th. And again, they go on to say that in the third quarter of 2013, about 30% more of the units have been sold. than the previous same point in 2012. So again, there's a huge increase in the Manhattan luxury condo market, and again too, these particular condos are selling at 4.6 million for a 3 bedroom unit, all the way up to $5 million for the penthouse. So again, it seems as though that there is a huge increase in, I would say, inflation too. Again, it's more the effects of inflation. Again, to defining inflation as an increase in the money supply, rather than just the price. Again, to the increase in price is the effect of the increase in the money supply. And then lastly, too, just to look at, again, to the idea of Mises, of the acme of the short run principle, and just looking at the overall global art market, which I guess is sizzling at this time. And just recently, it was sometime this week, there was a record breaking sale of $142.4 million for a single piece of art. And that also too, just like the Manhattan condo, this was an all-time record. And in fact, at this particular auction, the $142 million purchase was only one of 10 world record prices set at the auction. And again, to the New York event, it says it achieved the highest auction total in art market history, with $691 million in sales. So, again, too, I just want to close with the idea that normal individuals like you and I, we're not doing well, again, too, in this so called recovery. Again, too, it would seem with these sales, with all these record highs in the luxury goods in society, you would think that there was an economic recovery going on. However, too, it's evident that everyday individuals aren't rebounding like these ultra rich individuals. And again, too, that's having a quite a significant effect on keeping the CPI relatively stable. And again, too, since the CPI is staying stable, it's going to falsely indicate to individuals that there's not a lot of inflation in the society right now. However, too, also just like to make the point that this greatly proves, just like Murray Rothbard did with the Great Depression of the 30s, proves Mises's point that the first people who receive the money, again, they get to live it up at the expense of everybody else, which these articles do a really good job of showing. So again, too, this is just another example of, how there's, in my opinion, a pretty large wave of inflation coming down the road. So I just thought that I would make a video on these interesting articles and just show the difference between everyday individuals and the rich individuals, all the hedge fund individuals who have been receiving the money first from the Fed, just the differences in what seems to be the two economies of each group. But I hope you guys enjoyed the video. Let me know your opinion as always in the comments below. Also too, if you could like the video and subscribe to the channel, my brother and I also greatly appreciate that as well. But I hope you guys have a great day here, and as always, I'll see you next video. Bye for now.